Okay, let's take a minute to look at the disclaimer. This content is for educational, informational, and entertainment purposes only. Nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We are here only to spread the word on how BTA analyzes the market, how we look at the markets. This is Rod from BTA, and we are known as the middle traders. We are not going to get in at the exact bottom, and we are not going to get out at the exact top, but we will make a lot of money in the middle. We are the stock market masters. And sometimes it seems as though we can see the future. Okay, what I want to do now is take a look at the major ETFs. The ETFs that tracks the major market indexes, rather. Because we got a follow-through day yesterday, and on that follow-through day, the Standard & Poor's moved up really strong, and so did the Qs and the DIA. You know, we have to look for leading stocks and leading industry groups breaking out of sound base patterns. But if you don't have any stocks that you feel confident in breaking out of sound base patterns, then you may want to get a position in one of the ETFs that tracks the major indexes. So I wanted to take a look at all the major index ETFs and look at them with lowest and the 21-day moving average, because the 21-day moving average can act as a very key support and resistance areas. So the yellow line here is the 21-day moving average. Okay, this yellow line is the 21-day moving average. And this is a chart of lowest, our algorithm that stands for the launch of immediate swing. L for launch, O for of, I for immediate, S for swing, lowest. The launch of immediate swing. So when the magenta line is above prices, then the swing is down. And when the blue line, the royal blue line, gets below prices, the swing is up. So you're going to notice every time the line is above prices, more than likely you're heading down. Except for areas where you might get a little consolidation. It may go up and down. Okay? But for the most part, whenever the line is above prices, then the swing is down. And when the line is below prices, the swing is up. So this is the daily chart of the DIA. And we have lowest on here with the 21-day moving average, right? So notice today's action. Well, at the close of yesterday, here's the 21-day moving average. And you see yesterday, okay, yesterday on the 26th, Thursday the 26th, you see where we closed at. Right above this horizontal support level. Okay, but lowest turned into an upswing 3 days earlier. You can see that. But we didn't have a follow today, and the market was still trying to set up its bottoming phase before the rally. So we didn't want to take this trade too early. Okay, so we wanted to wait until the prices get back above the 21-day moving average, okay, and start breaking these key horizontal resistance areas, which was prior support. All right. And so we did that. We waited. And the good thing about it, we got a follow through day yesterday. So that actually confirmed and gave us the green light to start looking for leading stocks and leading industry groups breaking out of sound base patterns. All right. And notice the MACD gave us a bullish crossover. And the histogram here started turning green. All right. Showing us that we have positive momentum coming in. So Lois gave us a cue that the DIA may be ready to start a new upswing. Well, it's in a new upswing. Let's see if it can get from a swing into a trend. All right. So that's the DIA with Lois. So now uh let's look at this next chart here where we have our key moving averages. And once again, the yellow is the 21-day moving average. Okay. And we got the white line, which is the 5, and the green line, which is the 9-day moving average. Well, we got the 5 cross above the 9. We call that a bronze crossover. Okay. And you can see price has gotten above the 21-day moving average. Now, what we would like to see is more volume coming in. We would like to see more volume coming in here. It is rallying up on lower volume. But this week is a week right before a major holiday. So it's not going to be a whole lot of volume, okay, coming into the market right now. Actually, there's probably going to be a pretty light week because of the holiday. Now, here is a chart. The green line up top here is a line chart of closing prices. So this is the line chart of closing prices. Okay. And down here, we have this yellow line is the on balance volume. And we got the accumulation distribution line, which is another form of analyzing volume. And we have the price volume trend below in the royal blue. So notice we have a high here and we have this vertical line going right through the highs. So notice price broke above its resistance, this prior high. Price is above it now on the line chart of closing prices. Notice that the on balance volume also broke. The accumulation distribution also broke above its resistance. At the same time that price is breaking above these levels. And the price volume trend has broke above its resistance. So it's telling us that volume is coming in to the DIA. It's coming in, all right? That institutions are buying this thing. They've started buying earlier down here at the bottom. I'm quite sure they was accumulating. But now we have confirmation because we're breaking above highs and the on balance volume, accumulation distribution, and the price volume trend, everything is telling us that the volume is coming in. So even though the volume is below average on the volume bars, the on balance volume, another way that we analyze the volume, is telling us that money is coming into the DIA. Now, let's go and look at, we already looked at that chart. Let's look at in one moment, let's look at the lowest chart of the SPY. Okay, so this is the chart of lowest of the SPY, the ETF that tracks the Standard & Poor's 500. Okay, same thing. Lowest gave us the signal that it was the beginning of an upswing 3 days ago. Look at the MACD. Got a bullish crossover and the MACD is now positive and it's expanding, saying that the momentum is increasing. Okay. We just got above the 21-day moving average. Now, this 21-day moving average can act as resistance as you try to rally up and it bounce. Well, we just got above the 21-day moving average. Now, unlike the SPY didn't do what the Dow did as of right now. Remember, the DIA was coming up upon these major resistance levels. Okay, so now the SPY got a little work to go, a little work to do here. All right. So what we want to do is see the SPY get above this horizontal resistance area, which was prior support. Stay above the 21-day and get above that, and that will be a good sign. So the 21-day moving average is where we're at right now. We need to stay above the 21-day moving average. Okay. Now here is, we're going to look at the next chart here of the SPY with just the moving averages on there. and the volume bars here. So notice that the 5 is about to cross above the 9 now. We're almost there. The 5-day moving average, which is the white line moving average, and the green moving average is the 9. We're crossing right now, and we're getting above the 21-day. That's very positive. So we get our bronze cross and get above the 21-day moving average, and we want to eventually see these 21-day moving averages start to turn up. Okay, we want to eventually see those 21-day moving averages start to turn up. Now, let's look at the on-balance volume. So again, this green line up top, these green lines here is the line of closing prices. So you see prices breaking above. Prices breaking above here is prior high. Price is getting above it. Look at the on-balance volume here, the yellow line. It's breaking above. And the accumulation distribution, you notice here, it's prior high. It is breaking above. The price volume trend has not gotten there yet, but the 2 of the 3 is saying that, hey, volume is coming in. Somebody's buying. All right. So now here this is the chart of lowest of the Qs. Okay. This is the chart of lowest of the Qs. Notice that the 21-day moving average is trending down. And like I said, the 21-day moving average can act as resistance and support. So notice on the way down, it rallies up to 21-day and it collapses. Rally up to 21-day and it collapses. Well, now we got some consolidation here. Lowest has not signaled the beginning of a new upswing yet. As you can see, we don't have any blue line underneath prices. So lowest haven't signaled. We're still below the 21-day moving average, and we got this fractal here with this prior high, which was prior support. Now it's acting as resistance. We need to get above that. So the Qs are not ready yet. The Qs still got some work to do. It's not ready. Now, here's the Qs with just the moving averages. And once again, you see here, we got the moving averages and the volume down below. The 5-day is trying to get there where it want to cross above the 9. And we're coming up to a resistance here. This downward trend in 21-day acting as a resistance. So we got to get above that. And we want to see that crossover, that bronze cross of the 5 crossing above the 9. Okay. So now here's the on-balance volume for the Qs. Well, notice the other ETFs was breaking. The volume was coming in. It was clear. The volume, this is the prior high on the Qs. You notice volume hasn't broken the level yet. Here's the prior high. Okay, I'm sorry. Here's the prior high of closing prices. This green line is the line of closing prices. I'm sorry, I said that wrong. This green line is the line of closing prices, all right? Here, we have the yellow line once again, which is the on-balance volume. Notice price is getting ready to break, but the volume hasn't broken yet neither above its prior high. Now, the accumulation distribution line has done it. You can see right here, the accumulation distribution line has gotten above its prior high. But we need to see that on-balance volume get above its prior high, and we need to see this green lines of closing prices to get above its prior high right here. Its prior high right here. We need to see that. So the Qs is not ready yet. Okay, we need to wait to get some further confirmation on the Qs. Like I said, we play the middle. Okay, we're not trying to get get in at the exact bottom. You can get hurt like that. Okay, so here's the IWM. Okay, the IWM, the ETF that tracks the Russell 2000 small capitalization stocks. Now this is interesting. Okay, notice lowest has given us the signal of the beginning of a new upswing. You see the blue line is below prices. We just got above this downward trend in 21-day moving average, and now we're right at this fractal here, which was prior support, this horizontal level here, which was prior support. Now it's acting as resistance. We're right at it today. We closed right at it. We're looking for this to break above, stay above the 21-day, and break above this prior resistance. The key is to get above this 21-day and get above these immediate initial fractals of resistance areas. Keep that blue line lowest. Keep lowest blue line underneath prices, saying that the swing is in an uptrend. Upswing, rather. We're in an upswing. It didn't change to uptrend yet. It's in an upswing. Okay? So we want to get above this 21-day and above this here, this initial fractal here. If we do that, we're going to probably take a position in the IWM, okay? So it's setting up. It's almost ready. The Qs so far is the only one that doesn't look quite ready, okay? So now let's look at the IWM just with the moving averages, okay? Well, notice we got the 5 cross above the 9 right here, all right? The 5-day moving average is the white line. The 9 days the green. So we got our bronze cross right here. We have gotten above this downward trend in 21-day moving average, and it's starting to turn a little bit. We need to see that turned up. Okay, and the volume is really a little low. We would like to see some above average volume and stuff like that, but this is a holiday weekend. Holiday weekend coming up. So it's going to be a shortened trading week next week. Market closed on Monday. So it's not going to be a whole lot of volume going into a long holiday weekend. Okay, so we have to see how this play out next week. But the IWM look like it's almost ready. Now looking at the on balance volume here, up top, we got the green line, which is a line chart of closing prices once again, right? Notice right here was the prior high. Look, the closing prices, the line of closing prices has broke its prior high. Look at the on balance volume down here. This vertical line is going right across the highs. Notice we broke above its prior high. Accumulation distribution line did the same thing, and now look below here. The on balance, the price volume trend is doing the same thing. So volume is coming in. Even though we see on the volume bars, we're not seeing above average volume and a lot of accumulation doing our volume bar analysis, but the on balance volume and accumulation distribution line, which is another way to analyze volume, is telling us it's coming in. You got to look at things differently. Okay, you got to look at it from different angles so you can make sure you analyzing everything carefully. The IWM look like it's starting to set up. Okay, now this is the ITOT, the ETF that tracks the Standard & Poor's total market ETF. It's a total market ETF. Now, this is just the moving averages, a chart of the moving averages, our key moving averages, right? Look at the white line. It's crossing above the green. The 5 is crossing above the 9. And we're getting right at the 21-day moving average, the yellow moving average. We're closing right at it, okay? Look at the volume is coming in here. We got accumulation here, okay? We got accumulation coming in here, all right? So that's a sign of accumulation. Higher prices with above average volume, higher volume than the previous day. Higher prices with higher volume than the previous day is accumulation. Above average volume and higher volume than the previous day, that's even better accumulation, okay? So that's even better accumulation. Now let's look at the volume analysis on another level, just with the on-balance volume and the accumulation distribution line. Well, notice price, once again, price is breaking above its prior high. When we pick the vertical line here, here's the prior high for the on-balance volume. We're well above it. Okay, here's the prior high for the accumulation distribution line. We broke it. Here's the prior high for the price volume trend. We're above it. Volume is coming in. Now, this is the first ETF that we looked at that actually is showing accumulation here on the volume bars. You see the accumulation here on the volume bars, right? Right here, this bar, today's bar, was higher than the previous day. Like I said, today's bar, higher prices with higher volume than the previous day. That's accumulation. So this is the first ETF, the ITOT, is the first one that's showing accumulation here on the volume bars, and it's being confirmed by the on-balance volume. The rest of the ETFs we looked at was showing that volume wasn't, a lot of accumulation wasn't really coming in, but the on-balance volume accumulation distribution was telling us something different. It was saying that, hey, it's coming in, we're just not seeing it in the volume bars. And look at Lois. Look at Lois here. Lois signaled 3 days ago that the upswing was beginning. Okay? We just got above this prior fractal here. We broke above it. That's nice. Look at the MACD. It has got a bullish crossover and it's increasing. The momentum, the histogram is increasing to the upside. That's a lot. That's good momentum. The 21-day moving average is looking nice. It's actually starting to turn up. Here we got this red line is a weekly resistance level. This is on the daily. Of course, we've been looking at daily charts, but this white line here is a weekly resistance level. I took it off the weekly chart analysis, right? So we're coming upon a strong weekly level, a long-term resistance level, which was prior support. So now we got to break above this. If we could get above this, maybe come back and test it a little bit, find support, and then head up to this here downward trending trend line. That would be nice. So ITOT, we definitely going to probably be taking a position in ITOT. Okay, so we just went over all the major ETFs that track the major indexes. They're starting to set up. They're coming above their 21-day moving average. They're showing that volume is coming in. We got to follow through there. The 21-day moving average is the key here now. Can the 21-day now stop acting as resistance and start holding some support? Now, of course, we've been calling for a rally for quite some time now, for a couple of weeks now. All right, that the market was starting to bottom out. But now what we got to see, we're looking at the market is going to be a rally, but it's probably just going to be a relief rally. We might go back to some highs of when we had the inverted yield curve. Go back and look at those videos. They're on the channel. We might go back to those highs and then we turn around, okay, and start to collapse again. We're looking for this to be a relief rally, a tradable rally, so a rally that we can make some money in. But eventually, it's going to be a big collapse. And we'll be talking about that in future videos. But for right now, let's try to enjoy making some money on this relief rally. Okay, so we're going to do the next video. I'm going to do another video later on today. And it's going to be saying, why did we buy Microsoft today after the follow through day? We had a follow through day and we bought Microsoft. Well, why did we buy Microsoft instead of Apple? Well, we thought Microsoft was a better trade. Okay, so with that being said, look out for the next video. Okay, take care.